Hello, everyone out there. Hopefully, you're having a wonderful and grand tax season. I know it started off with a bang. I know people are excited. But two things that seem that people need to ask questions about are deductions and credits. What are they? So, I'm going to talk briefly about a deduction. A deduction is something that's very good. We need to all have deductions. And the two great deductions that we have are standard deductions and itemized deductions. And actually, you use that to actually reduce your AGI and derive at your taxable income. So remember, you deduct that from your AGI, which stands from your adjusted gross income, to arrive at your taxable income. And so the standard deduction is something that the government automatically gives to you based on your filing status. So if you're filing single, you're gonna get $12,200. If you're married filing jointly, $24,400. Head of household, $18,350. Married filing separately, $12,200. So those amounts will actually reduce your adjusted gross income, let's say, to arrive at your taxable. Now, if you want to itemize, you would actually look at your charitable contributions, some of your medical and dental expenses. You'll look at some of your, if you're using your house as a business. And so those are just a few. And if you're using those to actually calculate those final expenses, if they actually exceed your standard deduction, then you want to utilize your itemized deduction. So if you're married filing jointly, and like I say it's $24,400. So if your itemized deduction actually exceed $24,400, and then you will actually use your itemized deduction. If it is less than $24,400, then you won't use your itemized deduction. A lot of people have said, well, I calculated I contributed to the church, I contributed to United Way and other charitable contributions. And that is good to keep up with that. But since the tax law, the Tax Cut and Job Act that was passed in December 2017, it have raised your standard deduction so high that a lot of people that used to itemize actually don't have to itemize anymore. So it's actually simplified it for a lot of people. So in the past, you said, "Well, I took all the deduction." Now it may not be as advantageous for you to actually use itemized deduction. So definitely get with your tax professional and see what is the best for you. And for credit, man, we love credit. That actually reduces your tax liability dollar for dollar. And all tax credits are not the same. You have your refundable credit, your non-refundable credit, and your refundable credit. And so one great example of a non-refundable credit is the child care and dependent care expense credit. A lot of people use that as a $500 credit. And one way to look at this is if your tax liability was $200 and you got that $500 credit, that $500 will reduce that $200 to zero. And then you had that $300 access. That $300 access, you can't do anything about that. It's non-refundable. So it is good in a sense because it reduces your tax liability to zero, but you don't get any additional money from that. Now, our refundable credit, now this is what everyone love refundable tax credit. And the most popular one is the EITC, Earned Income Tax Credit, or what some people like to call Earned Income Credit. Now, in that same scenario, where you had a $200 tax liability and you get a $2,000 EIC, it will reduce that tax liability, that $200 to zero, and that $1,800 excess goes into your pocket. So that's why we love those refundable tax credit. And the other one I said is the partial refundable credit. And the most popular one that we have is the American Opportunity Credit. Now, if you have a student that's in college or university, or you may be in there, For the first 4 years, a lot of undergraduates use that. And the maximum credit you can get on that is $2,500. So 40% of that is actually a refundable credit. So let's do some quick math. Let's say at 40%. So if you get the maximum of $2,500, multiply that times 40%. That's a $1,000. So if you're eligible for the max, $1,000 out of that credit will be refundable, and then the remaining part, up to $2,500, will be a non-refundable credit. So as you see, deductions and credit are different. They have benefits in both ways. So definitely you want to look for all of your deductions. You want to make sure that you have all of your credits. And then hopefully I brought some clarity to this issue. And if you still are unsure, definitely feel free to reach out to me, Milton Johnson of Johnson Tax and Financial Solutions. I definitely would want to talk with you and make you feel at ease. So if you want to give me a call me at 883-346-2829. That's 883-346-2829. Or you can click the link below that I will have, and you can schedule a free 15-minute strategy session for us to go over some of your wants and some of your goals, and we could talk about it. So I look forward to hearing from you and talking with you. And in the meantime, be blessed and enjoy the rest of your day. Thank you.